Hi, I'm Kerry. I'm the host of Best of Us Investors. Been doing this channel since November of 2019. And those of you who have been with me a while know that I basically built a portfolio back then based on this book, The Big Nine by Amy Webb. And what it basically talks about, and it was done in 2017, is about the companies that are going to dominate from her point of view because of they are big data. And I basically built my portfolio because I bought into it. I believe that these big nine, these are the companies that are going to dominate our economy in the future. But I had a few problems with it. The first was that three of them are Chinese companies. I don't believe I want to be invested. I didn't back then. I changed my mind at some point, and then I'm back to it. I don't want to be invested in China. What I want to talk about, though, is the issue that I'm having with Tesla. I recreated the big nine down to the big six. I dropped IBM because IBM doesn't have any personality. I don't know who they are. I don't know what they do. And I don't think most of the world does. So I brought the big nine down to Apple, Amazon, Facebook, Google, Microsoft. And at the encouragement of Homer, I added Tesla. So those are my big six. Right now, they represent 20% of my portfolio. But I'm having some questions about Tesla. And I want to share those questions. And then I want to share with you where I went to get some answers and to see if you agree with me or you disagree with me, that's fine. But I want to go into this is my personal opinion. I'm not your financial advisor, and I want to make that clear to you, and then we'll look at Tesla.
Best of Us Investors presents Kerry Griegmeyer.
Okay, to clarify for me, I go to quite often Google search and I read, and then I go to Google's YouTube and I listen and I watch. And one of the persons that I respect quite highly in stock analysis is Tom Nash. And I just finished watching for the third time his analysis of Tesla. The video came out on July the 28th. Its title is OMG, Tesla just did something unthinkable. In this video, in the first part of it anyway, he does a very good analysis of Tesla's second quarter reports. And he covers such things as their vehicle delivery, and he speaks of trends. And he does a very good job of showing the trends that vehicle deliveries are going up, profits are going up, operating cash flow is going up, net income is going up. And then he carries it into the balance sheet and he shares with you their profits and their EBITDA and how it has grown substantially over the past 3 years, and gives it some tremendous thrust and forward movement. The one thing he doesn't mention that kind of threw me was PE ratio. The PE ratio currently on Tesla is, let's see, 120.8. So if you multiply its current price of $647, or let me say that again, if you multiply its number of shares times its earnings per share, which is $5.35, it has a PE ratio of 120.8. That basically means that you are buying at $647 their potential earnings over the next 120 years. That's a little high. So what I did was go to the other stocks that make up 51% of my portfolio. Right now, Tesla makes up about 10% of it. And that was Apple, Amazon, Facebook, Google, Microsoft. And I made a comparison. I compared their price their earnings per share, their PE ratio, their market cap, and the percentage of my portfolio that they made up. And what I found out, and I want you to look at these numbers, and the first thing that really struck me was that Tesla's earnings per share is $5.35 per share. Apple's is $5.57 per share. So they're relatively close. And I got to thinking, okay, what do I see in the future between these two companies? Do I see Tesla as the company of the future, the company that is going to take us into the new world? And I believe that new world is going to be driven by a number of things. The number one of it, I believe, is healthcare. Do I believe that Apple is going to be a major player in healthcare? Well, I look back to an interview in January of 2019 of Tim Cook talking to Jim Cramer in one of their stores, and Tim said, Jim, I want you to go forward 20 years and look back and ask yourself, what is Apple's biggest influence over the past 30 years? So this would be, or 20 years. So that would be somewhere in the neighborhood of 2041. And Jim said, well, I guess maybe the iPhone. And Tim Cook said, no, it's going to be healthcare. And I agree with him. I think that is the biggest change. So is Tesla going to make a major change in the area of healthcare? I don't think so. So I see a $5.35 earnings per share on Tesla and a price of $647 with a PE ratio of 120. And I see Apple with a earnings per share of $5.57, a PE ratio of 26, and a price of 145. Whoa. So do I then say, okay, is the fair price really of two companies that are growing leaps and bounds and really have their hand on the pulse of the country? Is Tesla's real fair price $145 or somewhere even less than that based on their price per share and their future earnings potential? I don't know. I'm puzzled. I wish I could ask Tom Nash. He's the analyst. I was a financial advisor, but I was never an analyst, and that's not my strong suit. I look at then Amazon. Amazon has a earnings per share of 10 times that of Apple at 55.56. But their price is $3,630, and their PE ratio is 65. That's pretty high too. So I'm buying at $3,630. I'm buying the next 65 years' earnings from Amazon. That seems a bit high to me as well. So I have to give that some thought. Now, again, I also recognize if I then go and look, what are my next biggest holdings? And that's 21% of my portfolio that is in biotech. And I'm looking at, CRISPR, Edits, Illumina, Natalia, Pacific Biotech, Bioscience, and Beam. And these are companies that aren't making anything other than Illumina. And it has a PE ratio of 83. And these others have no earnings whatsoever, and yet they represent 21% of my portfolio. So, and I justify that because cancer and cure of disease is very important to me. Hell, I'm 76 years old. My mother died of cancer, my father died of cancer, and my daughter died of cancer. So this is something I'm passionate about. And so I then say, okay, am I justifying that because of my passion, because I want it to be right? And is that what's happening with Tesla? We want it to be right. We put unrealistic expectations and profit potentials because we want it to be right. We want them to succeed. So with that in mind, I'm probably going to pare back my holdings in Tesla. I had hoped that these wonderful numbers that Tom went so deep into would have taken Tesla's price up to $700, and there I probably would have liquidated about half of it and brought my holdings down to 5% of my portfolio. But that didn't happen. So this is the predicament I'm in. This is the dilemma I'm dealing with, and I wanted to share it with you. I wanted to give you some insight as to how I look at things, and then maybe my hope is you'll re-examine how we look at how you look at things. I think we set unrealistic expectations, and what popped into my mind when I said that to myself just recently was Simone Biles. I feel so sorry for that young girl, 24-year-old. We and she set unrealistic expectations, and we had hopes that that she would fulfill our dreams. I think we put that same kind of pressure on people like Elon Musk. We hope they help us meet our dreams. Well, maybe they did. And maybe that was last year's news. And maybe we should be satisfied with Simone's book of work up until now. But let's don't put any more pressure. And for God's sakes, you people that have so much hate in you, that come back and take pleasure in throwing stones at her, don't do that to me. Don't do that to Elon. Don't do it to Jeff Bezos. I watched Elizabeth Warren throw stones at Jeff Bezos yesterday on the Squawk Box, and how she so discounts this man's risk that he took, and then the reward he received, and the jobs he created, and the taxes that those people pay into our system. And then she said, "We want more. We want more from you, Jeff." Come on. He followed your rules, Elizabeth. You are part of the people who set the rules. He followed them. He's made best from them. Leave him alone, and don't throw your hate at him and your jealousy at him. And I guess I'm getting off the topic here, but I think I've put too much faith in Tesla. I think my expectations are too high, and I'm sorry, Homer, but if it gets anywhere near $700 a share, I'm taking my profits off the table, and I'll probably go more towards the future, biotech, because again, and healthcare. I believe that's where our future lies. So that's my take. Kudos to Tom Nash. Kudos to I did a video yesterday on StockMo. There's some phenomenal information out here and this wasn't available back when I was a financial advisor back in 2005. So use it, but don't abuse it. Okay. I'm Kerry Grinkmeyer. Best of Us Investors. I'll talk to you again tomorrow.